What's going on, you guys? My name is Zach Hartley, and in this video, I'm going to walk you through exactly how I rebalance my portfolio. I'm also going to give you the tool that I use to do it. Here is everything you need to know. Let's go. All right, so the steps to rebalance your portfolio. Number one, you need to figure out what your balanced portfolio looks like. Number two, you need to figure out what shares you need to buy or sell in order to get to that point. And then number three, you need to execute the orders. So I'm going to walk you through this step by step. Number one, balanced portfolio factors. There's a couple of different factors that are going to influence what your specific balanced portfolio looks like. Those factors include your age, or at least the time frame before you need to pull that money out. Maybe it's retirement or whatever it is, but the amount of time you have to actually invest and manage that portfolio. You also need to think about your risk tolerance. Are you somebody that's comfortable with risk and bigger swings in your returns, or do you really want to mitigate that and make sure that you're kind of on the safer side there? You need to ask yourself that. You also need to think about how much time you have available to manage your portfolio. If you are seeing a little bit bigger swings and you need to stay up to date with these companies, it's going to take a little bit more of a time requirement. However, if you're looking for some safe, steady returns that are maybe a little bit lower, it probably will take a little bit less time. So you need to consider that as well. And then depending on where you live and what type of investments you're making, your tax situation can also play a fairly large role in how you manage your portfolio and what decisions you make. But I'm not a tax expert, so you need to do a little bit more analysis on that somewhere else. Now, balanced portfolio. I want to talk about this real quick because the balanced portfolio for myself compared to my parents is going to be vastly different. My personal balanced portfolio based on my investment strategy for kind of my short to medium term account is that I like to invest into 3 to 5 different industries, and I like to hold 2 to 5 different stocks in each industry. This is going to give me, let's call it at the maximum, 25 different stocks. That is full diversification. You can't get much more diversification anything after 25 stocks. And so that is a good range for me. That's something that I can manage, that I can look at almost on a daily basis, and I can stay up to date on most of those companies, and I can bring in new companies fairly regularly. So for me, that is what my balanced portfolio looks like. But let's talk about my parents for a second, because they're in a completely different situation. They're coming close to retirement, and so they need to think about what they're going to do with their money and how to make it last the rest of their life. And so for my parents, they can't really experience a giant downturn because in a few years they'll hit retirement and they don't have a ton of time to bring that back. So they're looking for a little bit safer returns, and so their balanced portfolio probably looks something closer to a 50-50 split between some form of fixed income, usually bonds, and then the rest of it can be in equities. And so that allows them to get a much safer return because half of their portfolio is going to pay them 2 or 3% absolutely guaranteed, nothing to worry about there. And then hopefully from the other 50%, they can get a slightly better return, still probably in safer stocks, something that pays maybe a nice safe dividend, something like Caterpillar or Coca-Cola. Or they can get into an ETF for diversification so that they have instant diversification with only one transaction and they don't ever have to really worry about managing that or balancing it. So for my parents, the situation is very different than compared to me, and you need to factor in those different factors that we just reviewed to figure out what your specific balanced portfolio is, because it's probably somewhere in between there. I'm sort of on the riskier spectrum, and my parents, that'd be a pretty safe portfolio. So you're somewhere in between there would be my recommendation or my guess. Now, let's do a quick walkthrough. If you guys are interested, I do have a completely free Excel tool. It is on zachhartley.com. That's what we're going to walk through right now. All you have to do is just click on it. You check out with it. It's completely free, and then you can download it. There's a link in the description to get that Excel sheet. That way you can download it, fill out the information, and use it for yourself. Okay, so here's what the current spreadsheet looks like. And as you can see here, I've got it color coded based on the industry. So on the left here, we got technology, we got renewables, industrials, and healthcare. Those are the 4 industries that I'm invested in right now. Now, just disclaimer, this is a practice spreadsheet. These aren't my current holdings, so don't go out buying Terraform and Canadian Solar based on this. But this is just a kind of demo that I use, and I use this spreadsheet to actually fill in my own information, and we'll talk about how often you do that real quick. But industries on the left-hand side here, you've got the stock name right here underneath that, and then you've got the quantity of shares that you own right here, the purchase price that you got into it at, and the market price where it's trading at today. I will be automating this in the future, but as of right now, it is a manual entry. And then you've got the book value and the market value that is automatically calculated. So let's say that this changed to 350. You can see that the market value has now changed right there. We can do it again to, let's call it 500. And now you can see that the market value has changed again there. And then I also have columns here for your gains and the weight of your portfolio. So you can see exactly how much of your portfolio is taken up by each individual share, and then the industry weight. So we know how much of our portfolio is in each individual industry as well, so that we can maintain balance between not only the shares, but also the industries. And so that's the goal of this kind of main spreadsheet here. And then on the right side, as you can see, I've got a title here that says rebalance. And so on the left side right here underneath ideal stock weight, this is where you have to enter how much of your portfolio you ideally want to hold in each security, whether it's stocks in this case, or you enter the information for bonds in the other case. Now, you just have to enter it. So for me right now, I have 10% holdings in one of the companies in each industry. So you can see for this one, it's Facebook. You can see below it's Tesla. You can see right here it's Honeywell, and then you can see Johnson & Johnson. All the other ones are 5%. And so this is going to be my ideal stock weighting. I'm going to hold basically 16 different stocks. 4 of them are going to be at 10%, and the rest of them are going to be at 5% of my portfolio. And you can see it adds up to 100%. If I change this to, let's say, 20, you can see everything's out of line. This has to be set at 100, and you can just kind of work your way through there. And then what it does is it compares where you're at right now and where you want to be, and it gives you this difference in percentage here. So this is really nice. It just kind of tells you whether you're up or down. It gives you the negative or positive there, and then it converts it into a dollar amount. So you can see, okay, this is about, okay, I'm $2,000 overweight in this stock right here, Amazon. Maybe I need to change something there. And then the nice thing right here is that I've automated it to give you the number of shares that you need to change in order to get to your balanced portfolio. So for instance, for us to get to a 10% weight in Facebook, we need to go out and we need to buy 2 more shares. For us to get to our ideal weight in Apple, we need to sell 1 share. For us to get to our ideal weight in Amazon, we need to sell 2 shares. And then for Tesla, we're totally fine. For Terraform Power, we need to go out and buy 12. And so if you went through and you executed all of these trades here, either buying or selling the specific securities, you would then end up with as close as possible to your ideal stock weighting and your ideal balanced portfolio. So that's how this spreadsheet works right here. As you can see, pretty much everything's connected. Let's say we wanted this to be 20%, everything moves over, and now we need to go out and we need to buy 7 shares of Facebook. So everything's connected here, and it works really nicely, especially if you only do this once a month or quarter or even 6 months. All it takes is like 10 minutes to fill out the information, and it will spit out exactly what you need in order to get to a perfectly balanced portfolio. And so this is a really helpful tool. If you don't have the analytics or a day trading brokerage that'll do it for you, if you don't have all that backup, this is a great tool and a great resource, and this is exactly how you do it. Now the key here is setting your ideal stock weight. This is the most important factor here, because this is what dictates your success over the long term. As long as you rebalance to this is the key to your success here. So making sure you get this right is super important, and it depends on those factors that we talked about earlier. You have to align your portfolio to your age, your risk tolerance, your time that's available to actually put into this, and what your plans are for that money and your tax situation. Now again, this entire spreadsheet is completely available for free with the link down below. Definitely check that out if you're interested. Okay, we're back in the PowerPoint, and now we need to talk about how often should you rebalance. And the answer to that is it kind of depends on a few different factors. Number one is after a certain amount of time, you can rebalance your portfolio. Maybe you sit down once per year, you fill out the spreadsheet, you make the changes, and then you let it go for a little while. That's a perfectly fine strategy, depending on what fits you the best. The other thing that a lot of people do is after they make a large deposit, let's say you make a deposit into your investment account every 6 months, and it's a decent little chunk, maybe at that point you should rebalance your portfolio each and every time. Or if your portfolio becomes out of weight and a few stocks become, let's say 20%, and your ideal balance is around 10%, that's when you can rebalance your portfolio. And so there's no hard rule of the best time to do it, but you should do it when your portfolio becomes out of weight, because then you have some risk there. Or after a certain amount of time or a large deposit, you basically want to try and maintain that balance in your portfolio as often as you can. But the problem is it will cost you money because you have to pay commission. So the more often you do it, the more it's going to cost you. And so you don't want to be doing it every week or every day, but you do want to keep an eye on your portfolio and make sure you do this every now and then. Also, you do not always need to rebalance the entire portfolio. If you're only off by one share, it doesn't really make sense to spend $5 or $10 on that commission if it's a $100 share. Maybe if it's Amazon or Tesla, then it makes sense. But if it's a $10 stock, don't spend the $5 to make that rebalance. It's just not worth it. And your perception of what a balanced portfolio is makes the largest difference. So if you are all your money in drones and crypto, then you better be able to manage that risk. But if you're a little on the safer side, then finding a balanced portfolio of, let's say, fixed income and stocks is definitely the right situation. Now, here are my personal rules for balancing my portfolio. Number one, I never like to let one stock control my portfolio. I never want the success of my portfolio to be hinging on one trade or one stock or one option. I want to make sure I have diversification in at least 2 to 3 industries at the absolute minimum. Right here is exactly what I do. I invest in 2 to 5 industries with 2 to 5 companies each. That's pretty much exactly what my swing trading account looks like. And if it's a risky company, I always start with a smaller position and then I will build into that position as I feel more confident in it. If you're worried about a trade, then you either need to size down or you need to find a different stock, because if you are worried as soon as you click that buy button or as soon as you hold it for one day, you're making the wrong trade. I will tell you that right now, and I will tell you it up front. Lastly, let the winners run and cut the losers quickly. Make sure you have appropriate position size, and if a stock is going higher, make sure you capitalize on that gain or put a trailing stop loss on it so that you can see the rise up. And if a stock is falling, my advice is to cut the loser, buy back in on support, buy back in lower, or use that capital to deploy it somewhere else where you're going to make a win. It's a much better use of your money. Now, if you're interested in learning how I analyze stocks, look at the charts, and basically make my trades, definitely consider signing up for my Stock Market Fundamentals course. That is where I have over 9 hours of content that is going to teach you step by step how to trade the markets, and it's completely free when you sign up for a 2-week free trial on Skillshare. There's a link down below. There's over 2,500 students that have gone through the course. There's over 140 reviews for you to read, and just yesterday we crossed over 10,000 minutes in a single day in watch time for the course, which is a massive milestone for me. So thank you guys for all the support. If you're interested in signing up for it, it's hosted on Skillshare and there's a link down below. Now, in summary, I think a lot of people focus on choosing the right stocks, but what a lot of people don't focus on is managing those stocks once they're in your portfolio and making sure that you're managing that portfolio correctly. And so if you can maintain a balanced portfolio, or at least rebalance your portfolio every now and then, that's what separates the good managers from the bad managers, especially once you start to scale up the ranks at a hedge fund or at a mutual fund. That's the difference between the good guys and the bad guys. It's not necessarily the stocks they pick, but how they manage that portfolio in the meantime, because a lot of them hold the exact same stock. So you need to understand that, and you need to manage your portfolio appropriately. It is more important that you don't lose your money than it is to make money. So you need to be very careful with that. Make sure you preserve your capital, and it's better to make a small return on it than no return and lose your money. So keep that in mind. And if you got any value out of this video, please consider hitting that like and subscribe button. I sincerely appreciate it, and I will see you guys in the next video. Good luck trading, good luck investing. Talk to you soon.